The Central Bank of China came out on Friday and said that they were going to lower their interest rates. They also have come out and said that they're going to make it easier for foreigners to buy their stocks. They're going to give easier access to the Shanghai stock market, which will hopefully for them bring more money in. And they're lowering the difficulty of people opening up brokerage accounts and of companies listing or publicly listing in China. So China is fully getting into the game of wanting to pump up their stock market. Also, of the major economies of the world, the Chinese stock market has definitely been lagging. So we are in full central bank manipulation mode. We all know what the US Fed has done, printed up to $4 trillion. The government fiscally spent 4 or 5 more trillion dollars that they did not have. Now the money printing in the US has stopped, but we still have a zero interest rate policy in the US, which by itself sounds bad, but then when you look over to Europe, they have a negative interest rate policy. So that makes our zero interest rate policy in the US actually look relatively better. Plus, Europe has yet to really kind of hit the nuclear option like the US has done and Japan has done, which is printing lots of money. But right now, they're dropping their interest rates below zero, and they're coming out with some money to buy up some bad loans in banks, but they have not really done it yet in earnest. And then we move over to Japan, which is the 4th largest economy in the world. The first largest is the European Union, the second is the US, the third is China, and the fourth is Japan. We'll make our way over to China. Japan has fully gone nuclear, printing the equivalent of $2.4 trillion for its size in comparison to the US GDP. So Japan is just going absolutely crazy to devalue their currency, and just please, hopefully for them, or for, if that's what they want, increase or get some inflation in that country, though they did just hit a negative quarter growth in their economy. So it's going to be very interesting to watch how this plays out. And then you have China that just came out and said, we're lowering interest rates and we're going to make it much easier for companies to get listed on our stock exchange. So what is going on, and how can we position our money from this, and what can we do, and what does it all mean? Hey everybody, this is RC Peck, and this is my weekend podcast. And the theme for this weekend is the US dollar is in the driver's seat. So even though I've talked about those 4 major economies, what's happening is when Europe devalues their currency, and when Japan devalues their currency, and when China devalues their currency, well, guess what? The strongest currency left, large currency left, is the US dollar, and that's pushing the US dollar up. So here is a price chart of the US dollar going back to mid-2006. So we have a pretty good amount of time to look at. What do we have here? 1, 2, 3, 4, 5, 6, 7, 8 years of data on this screen. That red line that goes up and down is a 50-period moving average. And you can see the last, 6 months, the US dollar has gone from, on this chart, an 80 to an 88. So it's up about 10% against a basket of currencies. The largest currency in that basket is the euro. But it's up against resistance. And this is what's going to get interesting. Is it going to break through that resistance? Now, as of today, it is actually within those 2 red lines. But anywhere in those 2 red lines is fine. If it breaks above, that could be bad news for a handful of things, and we'll talk about what those are. But right now, really, if you look at the US dollar, you can see that it's, though volatilely been doing it, it's been going sideways for 8 years, and it is now just kind of, has it completed a huge move up, or is it just pausing to continue up and out of this 8-year kind of resistance? So we don't know yet, but we're going to watch that, because if that resistance holds, that means oil will probably go back up. And if you look at the screen, we have, this is West Texas Intermediate crude. So it's one type of oil on this planet. The 2 main types of oil are Brent crude and WTI. I have WTI on here because that's what we use here in the United States. And if you look at the upper part of the screen, that is West Texas Intermediate crude oil, and it's at a pretty major support, a support that's held for 4 or 5 years. And now the question is it going to crash or break below that, or is that going to hold again? And we're going to have to watch this. Now, the interesting thing about crude, even though crude has fallen more over the last week or two, the energy stocks stopped falling with the rest of the stock market. So the energy sector got hit really hard, down 20, 25%, or even more depending on which sector of the energy sector you're looking at. But it's been hit pretty hard, and it's the worst performing sector this year. So what's interesting is even though oil has fallen the last 2 weeks more, the energy stocks have actually stopped falling. So something's got to give. Either the energy stocks have to continue falling, or oil has to move back up above that red line. And we'll watch it. The bottom squiggly line on the screen is actually looking at the correlation between the US dollar and oil. And if that black line is below the dashed line, that means there is an inverse relationship between the US dollar and oil. So if the US dollar goes up, oil goes down if that black line is below the dashed horizontal line. And if that line is above, that means if the dollar goes up, oil goes up. So looking back over this time period, this 6 or 7 years, you can see there's more of an inverse relationship between the dollar and crude than there is, a high positive correlation. So we'll continue to watch that. That's why I said the US dollar and oil are very connected. The other thing that's really connected right now to the US dollar is gold. And gold's at a really interesting point. Back in December of last year, it hit a low of about 1188, and it did it twice in December. And then it hit it again in early October, and then gold broke through that 1180-ish price and broke all the way down to about 1140, and then moved right back up to that same price point. So what's interesting is we have to see what's going to happen with that 1180, 1190 price point for gold. Is it going to hold and it breaks above and keeps moving up, and this what happened in November was just kind of a clean out or a head fake? Or does it hit this area and then move right back down? And the answer is we don't know yet. Some of the answer has to do with the US dollar, certainly not 100% of it, though the US dollar does have for sure an impact on the price of gold. If you look at the bottom part of this chart, again, there's another, this is another kind of correlation between the US dollar, but this time it's not the US dollar and oil, it's the US dollar and gold. And when that black line is below the horizontal line, that means when the dollar goes up, gold goes down. And since basically mid-February of this year, there's been a very strong inverse correlation between those two. So, it's going to be kind of interesting to watch what happens over the next couple weeks. If the move in the US dollar over the next couple weeks moves up, it's going to put a lot of downward pressure on oil, on gold, and on interest rates, right? Because that's a strong dollar or a strong currency, and people want to be putting more of the money in a strong currency. And as 3 of the 4 largest economies on planet Earth want to devalue their currency, money will flow into, relatively speaking, the strongest of those 4, which right now it happens to be the US dollar. So the takeaway is we got to watch what happens over the next couple weeks to really get that important feedback on the direction of gold, oil, and interest rates, because that is having a fairly large impact. And really what's behind this is the central banks continuing to do what they need to do for their own economy. At the end of the day, that's what each central bank will do. They will do what's best for their own economy. And us as investors, we should be aware of what they're doing to manipulate their interest rates and their currencies. Though I will say this, the U.S. stock market is loving all of this manipulation around the world, and it's a theme that I've talked about for over a year, that as the Fed, U.S. Fed, ends their money printing, the baton will have to be handed to another major central bank, and there's 3 that it can be handed to, and they're all doing something about it. Hey guys, this is really just another step towards securing your portfolio, your security, and your life. Until next time, this is RC Peck.